Hey everyone, it's Ryan coming to you this week with another traction tip. So today we're in Singapore in the financial district. And being in the financial district kind of got me thinking about a question that's come up several times lately, and it's around budgeting. Why do I need a budget? So today we'll talk briefly about why do you need a budget? How do you go about creating one? And then finally, if you got it, how are you using it? Are you using it effectively? Make sure you're getting the most bang for the effort that you put into it. So let's go ahead and get started.
So I'm always surprised. It seems that I'm talking to more and more businesses lately, and many of them go through the effort, the work to create a budget, and yet they're not doing much or anything at all with it. So they're putting in the time, but they're not reaping the reward. So the first question, why do we need a budget? Well, number one, it allows us to go to the bank. So many times when you go see your banker, they're going to want to see a budget. So a budget allows you to go to the bank. Number two, it allows you to test things. For example, you may say, what if we spend $50,000 next quarter on this sales initiative and then we expect to bring in $100,000 the following quarter in profit? Does that make sense? You can plug in numbers, test numbers on your budget and see what happens to the financials. You can use that to make wise financial decisions. In fact, I've lost and won arguments based on looking at real projections, plugging in projections on a budget. So it helps you make better financial decisions. Number three, it helps you teach employees. I'm a big fan of getting employees involved in your finances. I think it helps them be better employees and you be a better owner. This is called open book management. So don't take my word for it. If you want to check out open book management, you can Google it. But if you do want to teach any level of financials to your employees, budgeting is a great place to start, and showing them a budget is a great place to start as well. So it allows you to teach your employees. Ultimately, it just puts you more in control of your business. You can make better decisions. You can decide, should we make this change? Should we hire this person? If you have a proposed hire at this point, but yet you see sales are slipping off, you can make better decisions and postpone that or hire sooner. You can make all kind of better decisions based on a budget. So these are just some of the reasons why you need a budget. So say you say, okay, Ryan, I get it. I need a budget. How do I go about creating one? Well, there was a person that had a big impact on my budgeting mindset. And this gentleman's name is Mike McAllowitz. He wrote a book called Profit First years ago. And when I got a hold of this book, it literally changed my budgeting life, you could say. And he made one small shift in the way he thought about budgeting, and it made a big impact on his businesses. And when I did the same, it made a big impact on my businesses. I've been managing the books and running the books in my businesses now for probably 2 decades. And this one change made all the difference in the world. And it's such a small change. So this is the traditional accounting formula. It says our total sales, that's all our revenue, total sales minus our expenses equals profit. And so you would probably like your profit to be a little bit higher, right? Well, looking at this accepted, this generally accepted financial formula, we're kind of human nature. We kind of spend as much as we get. So our expenses seem to go up, and our profits don't. So let's just say your sales are $100 and your expenses are $90. You're left over with $10. Well, what Mike suggested is that you just flip this formula around and you say sales minus profit equals expenses. So now you say, well, we have our $100 of sales. What if we want to make $20 in profit or 20%? Well, we take our 20% profit and we're left with 80% for expenses. So if you follow this, it kind of forces you to get your expenses in check because, listen, expenses easily can go crazy if they're not checked. So I recommend looking at expenses often, at least once a year, if not more often. But check out this book. It's a great book if you're getting started in budgeting. So number two, what should we do next? Well, if you've never created a budget and you're really not getting all your data entered into your financial program, or you don't trust the data in your financial program, unfortunately, that means you got to go grab receipts. So go dig through your boxes under your bed, through the shoe boxes at the top of the closet, find all your receipts, find as many invoices as you could find, because we need some way to estimate how much you're making, how much revenue you're bringing in, and how much you're spending on a monthly basis. We need to figure out a way to estimate that. Now, the good news is most people aren't in quite that bad a shape. Most businesses are using QuickBooks. I think over 80% of small and medium businesses use QuickBooks. Other products from Sage or FreshBooks or Xero are out there. So you're probably using some type of accounting program. If you're using those, you might even have a budget button. In fact, in QuickBooks, there's a button you can press that tries to create a budget based on your previous period or previous year's numbers. So you could start with that if you'd like to. If you don't want to go that route, then just run a P&L. Run a P&L for the previous year or the previous quarter. We're trying to estimate about how much every month we have coming in. Here's a sample P&L. So about every month, how much can we expect from revenue? I like to break it down by line of business. So if you have 2 or 3 products or 2 or 3 services that you offer, I like to break it down to see more math, basically make better decisions that way. Then cost of goods sold. How much are these things costing us? Then expenses. What other expenses do we have? This brings up a good topic. Fixed expenses. Fixed expenses are those expenses like your rent, things that don't ever change. Then we have variable expenses like our COGS, our cost of goods sold, and those change based on how much we do or how much we sell. So if you're selling cars, if you sell a lot of cars, well, your cost of buying those cars, the number of cars you buy, that goes up. So your cost of goods sold would go up. So that's variable based on how busy you are. And then there are also expenses that are semi-variable, things like payroll. Payroll's relatively fixed, but if you have a busy month or busy quarter, you may hire temp staff or you may hire a new person. If you're slow, you might lay off some temp staff or a person. So that can vary to some extent based on how busy you are as a company. So those are semi-variable. I kind of did like this P&L and broke it down and saw cost of goods sold. That was one of the main numbers I wanted to see. We'll get to that in just a minute. But you can start with your P&L. Let's pull up another example here of, give me one second, an example of a budget. So this is a budget sample from Capterra. So I will upload this to the blog. You're welcome to download it and play with it and use it. It's a very simple budget. It's a good place to get started if you've never created a budget. And basically, we're looking at our monthly budget tab. We're listing all of our revenue sources. So for example, if you had 3 or 4 lines of business, you would put your revenue projections for each one here. Same thing for other non-operating revenue. Say, for example, that you charge interest if people are late on payments. You could put that in here as a non-operating revenue source. And that gives you your total revenue. And then list all your expenses. We get our total expenses. And then what's left is our profit. So this is a very simple budget and it works. If you've never created a budget before, this is a good place to start. And listen, don't worry if you're off a little bit at the end of the year. In fact, my first year creating a budget, I was wildly off. But the good news is your budgeting muscle, your predicting muscle here, it gets better and stronger the more that you use it. So the more you budget, the better you budget, the more accurate you'll be. Eventually, after doing this for several years, I was within literally 0.5 percentage point every year. So you can get very good at budgeting the more you do it. So this is a very simple template. Then what you would do, you would compare, you would do this at the end of the year or end of your period, typically for the next year. So I would start working on this normally in Q4, beginning of Q4, even end of Q3 for the next year. So if I was planning 2020, then I would start working on that budget, sometime August, September, October of 2019, because you want this finalized before your period starts. Then once the period starts, you go in and you put in your actuals every month. So you put in the real numbers. What do we really make on revenue in each of these? What do we really spend on expenses? And then you can compare the variance. Were we over? Were we under? Because you need that information to know if you need to make changes to your plans. Here's a template that I made. I actually use this exact template I put together to run one of my businesses, an IT company. So for example, I wanted to track product sales. How much revenue did we have coming in each month for selling product? And then these were our other lines of business, things like managed services and projects and break fix work. So I wanted to see each of those. And all of that added together was our total revenue projected for the month. Then we listed our cost of goods sold. How much did these things cost us? So we listed all of our cost of goods sold. And because we were a service company, I know that payroll is listed as an expense on your profit and loss, on your P&L report. But I wanted to see it as an as cost of goods sold, since I was a service-based company. So any payroll that was required for me to deliver the service I was billing for, I was charging my clients for, I listed it as a cost of goods sold. So technical payroll went here as a cost of goods sold. And so my revenue minus my cost of goods sold left me with my gross profit in each of these areas. Once I had gross profit, then I could start deducting expenses. So now admin and sales payroll, those were not, while they were definitely required to run the business, they were not required to deliver the service. So they fall into just the general expense category. So I had payroll and taxes for admin listed here as an expense. Then other expenses, things like bank charges, depreciation and rent and communication, things like that. Sales cost, mileage, things like that. Down here, so it would automatically tally all of my expenses. Then it would show me net profit. So basically, after all of my cost of goods sold and all of my expenses were deducted, how much real profit did I have? Another thing I wanted to see is there are numbers in your business that don't show up on your P&L. For example, debt payments. If you have debt payments, they're probably shown on your balance sheet. So make sure you have that noted somewhere so you don't think that all the net profits are just cash to the bank you can run out and spend. You might have other obligations you're spending on. And then the beauty of this template is that I actually had it showing me profit by department. So I could see if one department was profitable this month and another was not, or vice versa. If a department was not profitable for long term, you could make some decisions on that. Or if it was very profitable, you could make some decisions on that as well. So what I would do when I would start planning my budget every year, I would look at my average for the last year. I would plug in that. Let's just say my average on product sale was $100,000 a month. I would put $100,000 in every one of these fields for the whole month. I'm sorry, for the whole year. Then I would go through and look at cycles. In our business, November, December was always extremely busy. January was a little slow, so I would adjust these accordingly. I never kept them flat because I had salespeople and sales teams working on this. I expected these to grow. So how much did I want it to grow? 2%, 20%, 40%, 70%. I could put that in here. There may be times where you do not want a department to grow. For example, if you're phasing out a product, maybe you're seeing flat growth or you're predicting that revenue to go down. As long as you can justify it, put it in there. You want this to be as real as possible. So then I would go through and I would do that for every area. I would estimate what I really thought expenses would be, what I really thought cost of goods sold would be, and I would do that for the whole year. Again, I was a little anal, so I broke these down into many categories. You do not have to be this category specific if you don't want to. You can lump some of these together. The real important part here, though, is that we break out our revenue into a couple different buckets. It just helps you make better decisions. Cost of goods sold into a couple of buckets. I'll upload this template if you'd like to use it. Once you have that, then every month go in and put your actuals in. So you could see what did we actually do, and then you could have this expense variance tab would show you what was off. Were we under $5,000? Were we over $75,000? You could see that at a glance on this expense variance tab. And then ultimately, I had an executive summary, and this whole tab was automatically populated, so you didn't have to fill out any of this information. For high level, for employees or for people on my leadership team that I wanted to see this information that they didn't really care about the weeds like I did, it would pull this from our actual tab and show us really what we did every month on a real basis, but on a summarized view. So this is just a quick down and dirty on budgeting, why you need one, and a quick explanation of how to create one. So good luck. It's not complicated. Do not overcomplicate this. And finally, my disclaimer, I am not an accountant. I'm not a CPA, so get help from your CPA. That's what they're there for. And if you have any questions, feel free to shoot me an email as well. Talk to you next time.